Hey everyone, it's Rachel from MarketEdge.com here with David Blake for this week's Tech Talk. Let's go over watch lists today, David. This is a crucial piece of the Market Edge puzzle, and I'd like to go over how our users can create watch lists, organize their stocks, and really use these watch lists to leverage the best possible trading strategies they can.
That sounds good.
All right, take it away.
Okay, one of the great things here in Market Edge, especially as long as we've had this out there, where our professionals or the brokers that use this have always been impressed with our watch lists feature that we have. And what this gives everybody an opportunity to make a list of stocks and check them daily or weekly just to see if there's been any technical changes, upgrades, downgrades, or deterioration. It's very important that you use this feature. It's one of the unique features that make it real easy for you to track your holdings. If you're not using it, you certainly should be.
That's right. The nightly email subscribers received from Market Edge shares the most recent upgrades and downgrades on the stocks across all their watch lists. Your opinion changes and the requires attention section of your homepage are also populated with stocks from your watch lists. Make sure you keep your watch lists up to date in your Market Edge account in order to make the most of this tool. So, given that, how do our users decide what to add to a watch list?
So when you make a list of stocks, the first thing you want to do is make sure that you have a list of stocks that are fundamentally sound. A fundamental analysts are looking at all the different ROEs, ROIs, they look at the PE, all this type of thing, and they're gonna rank it as a buy or sell or hold. Then they'll also have it as overweight, equal weight, underweight. You can go anywhere on the internet to find a good list of fundamental stocks. I this morning went in there into the search on Morgan Stanley best buy list, and it came up with a list of about 8 pages. I went through and I wanted to find the stocks that had a raised price target, which it says on this list, and also I wanted the stocks that were overweight rather than underweight, which means they like the stock and think it's going to go up. Now, if you come in here, pull this down, on the right-hand side, you'll see create new watch list. So we'll click that, and you type in a name. Today, we're going to call it Goldman Sachs Best Buys. That would be a nice list of stocks to add to that. Then you could continue to add stocks. And what I would recommend is make sure you have that stock list with you, because if you don't do it here, you can add the whole list at one time rather than, do it one at a time. So you click on add multiple stocks, and it tells you just enter one symbol per line. And what we're going to do is go down this list and look at all the ones that are rated buy or have had an upgrade from Morgan Stanley. Anyway, you get it. So you get your whole list of stocks in here. And I would recommend having your list in front of you and doing it this way. And here it shows up. You have Goldman's Best Buys with all the stocks that you've just entered. If you have more than, I think it's 20, you can expand the list over here. But if you can also import stocks, if you have a list, you can put it in Excel, you can import it here. Now, what you do once you get this, as this page is up, the things that I look at, and when I did doing portfolios, I always wanted, number one, I wanted to know the 50-day relative strength, because if I click on this, okay, this gives me a list of the stocks that are actually beating the S&P 500. I don't want to buy stocks that are underperforming the market. You want to beat the market. You want the stocks that are moving up and are winners. So if you can get across here, I always put the power rating. You can customize your report up here. I want the power rating. I want the 50-day relative strength. I want to know what the close was. Now I do the 5-day percentage change and the 10-day percentage change. The reason being, when I'm looking to buy a stock, it's, like something like Soxa, which is a leveraged semiconductor, would normally be in here. But if I have something that's over the 5 to 10 days up 12 to 20%, I'm not going to buy it that day. I'll wait until that comes down to where it was, because it was probably overbought, and I'll wait for it to pull back a little bit to maybe 2% and 0.3% over the last 10 days. Well, this has a bearish up down. So you don't want to buy something that's already moved 20%. There are several reasons for that. If you get a list of, say, 50 stocks from Goldman Sachs, and they say all 50 are buys, you pick out 3 stocks to buy. If you're down 20% in the next 2 weeks, you think Goldman Sachs research stinks. But what's happening is you have different outlooks or time horizons that they're looking at. The analyst who upgrades a stock, maybe he upgrades Avco or Broadcom, you can say, my God, this thing's already up 100% over the last several months. Why is he upgrading it now? But late to the party, obviously, but it's probably going to have a pullback. But he's looking out maybe a year or two, and he thinks over the next 2 years, this stock's going to be a big winner. And he doesn't really care if it falls back 15, 20%. So what we want to do is take that fundamental list after you put it in here. We're going to check which stocks have a strong power rating and which ones are outperforming the market. When I look at these and I keep my list going, as long as they're outperforming the market, I'm going to keep them in there. If they get downgraded to a neutral, I'll look at the chart, check out some other things, and then I may sell it. But when it falls down below, say 0.95, that means you're underperforming the S&P 500 by at least 5%, or even at 0.97, something like that. It's gone if I'm an active trader. Okay. So in this case, if Workday would be sold, even though it's a long, it's underperforming the market, and something we probably don't want to know. And as it was long, the power rating was above 59. So this thing is deteriorating and underperforming. That's something you want to watch. When you come in to buy something, you can take that list of Goldman Sachs or whoever's best buys, and this will give you the strongest stocks out there. In this case, WDC, Western Digital, up 13.46%. So it's right on the border of whether I would want to jump in right away. It's had a big move from about 30 back in April up to 63 right now. So it's had a heck of a move. 28 to 80 was the high. I keep out year high, year low, and up down slope are the other ones I want to keep in here. WDC, the year high was 80 and it's still at only 63. If I'm wondering whether I should buy this or not, you're still underneath the yearly high. So it would probably be a good buy to me. Now, I also want to make sure that I have a bullish up down slope. They're starting to see a little bit more distribution in the stock. They're not under aggressive accumulation, which would give me pause on this. But then again, here is 68 to 46. So I'm probably not going to buy these. But these up here are strong buys. And I think that if you were looking to buy any of these, especially with this kind of 5-day and 10-day change, they could probably be bought in here. You make it to the charts just to make sure you don't have a 14-day RSI that's over 80. You could probably also add that to your report if you wanted to. So this is one way that you could use this. It's probably one of the best ways. We have a ton of brokers that use it this way. They run portfolios for their clients. We also have some money managers that want to have exposure to every sector. We have 11 sectors. If you go into the Wall Street Journal, they will have a section on every sector, and they will give you the top 10 or 15 stocks in that sector. That would be a way you could make up 11 different lists. Now, here's another little tip when you're trying to find out what stocks you want to buy. A lot of asset managers, they're going to look, well, they want to be aggressive when you have growth stocks, which would be considered XLY, consumer discretionary, outperforming consumer staples, which are more of a value or defensive type of play. Now, in this case, you can see how they've outperformed. Now, you remember back in March, people started getting everybody talking about, okay, this is going to be a value-led market. And as you see over here, the consumer staples were close to outperforming the growth, the XLY, the consumer discretionary, for a while. When you see the XLP outperforming the XLY, that's a sign that you need to rein it in a little bit, and things are going to be, a little bit more conservative. Now, remember, back in 24, we had a bottom around October. It was a kind of a shaky August, September. As you can see, you should have been more conservative at that time period if you follow this example, this chart, because the consumer staples or defensive stocks were outperforming the growth stocks or the momentum plays. And if you put this up on your screen, XLY, and compare it to XLP, it'll tell you what you should be doing. Right now, we're starting to see the growth stocks making new highs and break out again, and then they're saying that a little bit of a downturn in the defensive stocks in the XLP. So we'll watch that. When you see something like this, that's when you want to start to adjust your portfolio. I'm not just grab the Mag 7, every high-tech growth stock. I want to be more conservative in my holdings. And just a little tip for you. When you see this, go back to your stock watch list. Now, let's just say if you did have XLP above your XLY right now, then you could go back to this list take a look. If you had something like say a Procter and Gamble or Kimberly Clark, those are considered consumer staples. Those are the stocks you'd probably want to add to your buy list rather than Nvidia or a NTAP or something like that. And that'll kind of keep you out of trouble a little bit and make sure you're in the right segment when you start to have some shifts in value versus growth. Hope that helps you. If you have any more questions, somebody can walk you through this. I do want you to make sure you start to use that. You don't have to look at it daily, but at least once a week. If you're looking at some stocks that you don't know what to do, check out that 50-day relative strength or the downgrade list to the neutral and see whether you want to sell that position or not.
All right. Easy enough. Thank you very much, David.
That it?
That's it. We'll chat next week.